This is not financial advice. I'm recording my thoughts about Plug Power. In this video, I'm going to discuss whether Plug Power can do a 10x by 2030 or not. First of all, why am I even thinking about this 10x? That's because of their company's guidance for 2030, in which they're saying they can achieve $20 billion of annual sales and 35% gross margin and about 20% operating income. So if they can achieve these numbers, take a look at the valuation that I did. I'm going to assume a net profit margin of 15% because they're promising operating margin of 20% plus. So by the time it gets to the net profit level, it'll be less. So with that, they can make about $3 billion of net income in 2030. I'm assigning a multiple of 30, with which this company would be worth about $90 billion. And I'm assuming 5% dilution, which I think is reasonable. With that, the stock price would be about $107. Currently, they're at $12, right? So that's almost 9x in almost 7 years. So that's a great return. So now my job is to validate these numbers and look for the probability of these happening. I'm interested in 3 numbers. One is revenue. Can they achieve this $20 billion of revenue? How realistic that is. Then I'm going to look into the net profit margin of 15%. For that, I have to look at where they are at now and then what is their plan to get to that profitability. And the third thing I need to confirm is the number of outstanding shares. I'm assuming 5% dilution at 844 million outstanding shares by 2030. So I have to evaluate how realistic that number is. Let me get started with the first piece, that is the revenue. They're saying they can get to $20 billion of revenue in 2030. Currently, this year, they are promising about $1.2 billion of revenue. So that's about 20x revenue increase in 7 years. So to look at its feasibility, let me first talk about their business model. As you can see on the screen, there is a green power source, which is solar, wind, and hydropower. Using that power, Plug Power uses their electrolyzers and cryogenic equipment to produce and liquefy hydrogen. Then that gets transported into storage and handling facilities, and that gets dispensed in retail stores to, as you can see on the screen, there are some lifting trucks and there are some fuel cell electric vehicles, and then we have medium-sized trucks and we have semis. Plug Power makes money in 2 different revenue segments. One is applications, the other one is energy. In the applications, they have material handling, fuel cell EVs, stationary power, etc. And on the energy side, they have hydrogen fuel, electrolyzers, and cryogenic equipment. As you can see on the screen, they're estimating about $5.6 billion from applications and $14.4 billion from energy sector. Let's now look at their pipeline. They submitted proposals for about $12 billion. And they were already awarded $2.5 billion. So we do not know what happens with the rest of it because they have a lot of competition in the form of Intelligent Energy, Bloom Energy, Ballard Power Systems, Energy Nova, Hyaxium. So there are a lot of companies that compete with Plug Power to get this revenue. As I said before, this year they're planning to make about $1.2 billion of revenue. And by 2026, they are saying they can get to $5 billion. So that's a 60% year-over-year growth, which is extremely hard to achieve because I'm getting different numbers when I look for hydrogen market growth year-over-year. There is definitely demand. There is definitely application for hydrogen. There is a lot of interest around the world, especially in the Europe, to become carbon neutral, and hydrogen is a part of that carbon neutral initiative. So there is demand. It's just that we don't know how much that is. With all the competition that Plug has, it is very hard to believe that they can grow 60% year over year for the next 3 years and then 40% year over year for the next 4 years. So this 20 billion revenue number is actually hard to believe for me. So in conclusion, this $20 billion of revenue by 2030, which is 20x from this year's revenue, seems like a very hard task to achieve. So I'm not going to believe in this $20 billion revenue number for my personal journey. Now let's move on to the profit margin. I have to validate the 15% net profit margin and the 20% operating margin that they are promising. So let me look at where they are at now. As you can see on the screen, in the most recent quarter, they made about $210 million of revenue, and their gross margin is negative 35%. Negative 35% gross margin is terrible. It means that they're selling their products for far less than what it is taking them to produce them. So that is horrible, and the operating margin based off of $209 million of operating loss is about minus 100% operating loss. So from minus 100% operating margins currently to plus 20% operating margins in the next 7 years. So how are they going to do that? They're saying that they will do some equipment improvements, service improvements, and fuel improvements. And they're saying they will reduce their operating costs with continued innovation, vertical integration, supply chain leverage, and OPEX leveraging. So at the moment, I only see the plan on paper, but I need to see some execution for them to get to at least positive gross margins, so we can at least think about a positive operating income, because they will get a lot of government incentives to continue with this hydrogen production. So even if they have single digit gross profit margins, they can get to a higher operating margins if the government incentives are significant. And the government incentives, in my opinion, will only increase with time until 2030. So I'm not worried about government pulling back their subsidies and incentives. So I would like to see Plug Power make a positive gross margin for me to start believing in their guidance of plus 20% operating margin. So at the moment, I'm not confident until they show me execution in the right direction. Now let's move on to the third aspect, that is the number of outstanding shares. I assumed 5% dilution year over year to get about 844 million outstanding shares by 2030. To estimate this outstanding number of shares, I have to first look at their dilution in the most recent quarter. As you can see on the screen, they had 577 million outstanding shares in March of 2022, and now they have about 589 million outstanding shares. So that's about 2% dilution, which is not bad. Due to the type of business they are in, they have to do a lot of capital expenditure to build the infrastructure required for this business. And they also hand out significant stock-based compensation. You can see on the screen, they offered about $43 million of stock-based compensation, which is almost 20% of their revenue. And that is significant. It has to come down. For the purpose of capital expenditure, Plug Power has about $3 billion. And if you also add the restricted cash, property, plant, equipment, etc., there would be another $2 billion. So about $5 billion. But they have to spend a lot on the infrastructure in the coming 7 to 8 years to get to that $20 billion of revenue. So this is what they are proposing to reduce dilution of the shareholders. Plug is evaluating several financing options with counterparties, including but not limited to the DOE loan program, strategic project investment partners, and asset-backed loan facilities from major banks. And currently they have close to $5.7 billion on the balance sheet, and they're saying that they're well positioned to fund the forecasted growth without diluting the shareholders. Personally, I have doubts about the execution of this plan. I think they are going to dilute the shareholders significantly, much more than 5% year over year, to fund their forecasted growth. One last thing I would like to mention is the competition, which is Bloom Energy. It seems that their system efficiency is higher than Plug Power. In addition, they make more revenue than Plug Power, but their operating costs are much lower than Plug Power. So that worries me that Plug Power may not have a moat in this hydrogen sector, and that Bloom Energy might be coming up with something more cost effective than Plug Power, which is going to hurt Plug Power's revenue as well as profit margin. In conclusion, I do not believe that Plug Power's guidance to 2030 will become a reality based on the current situation. Having said that, I will follow Plug Power and track its revenue growth and how they are doing with respect to their negative gross margin, whether they are heading in the right direction or not, and then how they are going to fund their forecasted growth without diluting the shareholders. And based on that, if I see an attractive price entry in the coming future, I would start buying Plug Power. But at the moment, at $12.5 price tag, I'm not going to buy Plug Power shares. Let me know your thoughts in the comments. Thank you so much for watching.